Good morning. I'm going to cover Tesla and their recent announcement to slash prices on some of their EVs, as well as go over what this means for the stock going forward. I mean, we all know that Tesla has had an extraordinarily bad year. I think it's down 65% from the all-time highs. It was just not a stock you wanted to pick in 2022. But that doesn't mean the company's necessarily been doing terribly. It could mean a bunch of factors. I mean, Tesla had a crazy run up, so I think it was artificially a little bit high anyway. So it's important to look at a little bit of background about the Model 3. See, when the Model 3 was first introduced, Elon was trying to sell it as a more of a budget car. It was going to be a little bit cheaper than their Model X and their Model Y. So it was important for Tesla to bring this car in at a good price, and their price target was $35,000. Now, they have never been able to hit that price target, but that's something we want to keep in mind. Like, that was their original goal in 2019. In their opinions, $35,000 was cheap enough that everyone could potentially think about buying. Like, if you're in the new car market, you could potentially think about $35,000. Most cars were between 20 and 30, so an extra $5,000 for the potential benefits of the EV might seem like a good experience for some people. So the ultimate goal is to provide an EV that was affordable and attainable, hopefully to the masses. And I know Elon still is looking for a car around $25,000, but the goal was $35,000, which would put it in the ballpark of Toyota, Honda. I mean, consider a new Accord right now. The base model with no packages costs $26,500. So if you can offer it something at $35,000 with increased benefits and savings from, the obvious electric car savings, people might go after it. So the Model 3 was supposed to be $35,000, and Tesla was not able to hit that mark. It's a number of things: pandemic, starting new assembly lines, cost up and down. So it was really hard to come up with a price, and their price was $47,000. And $47,000 is luxury car territory. It's not something that is going to appeal to the masses. And we all know that Tesla's build quality is it's hit or miss. So if you're offering luxury car prices and you're not getting a luxury car experience, now take for granted that and Tesla is a different experience than other cars. So you get that benefit. But it's not going to be forever. Teslas aren't going to be always on the front line of everything. I mean, they could be, but his goal is not to be paying for that experience, is what I'm trying to say. So you want 35, but you're at 47, and this is very far from the original goal. So let's look at what the price cuts mean this time moving forward. The price cuts were for the Model Y and the Model 3, which are Tesla's two top-selling cars, believe it or not, with the Model Y being the most top-selling. So the Model 3 price cuts are as follows. The base model has been reduced by $3,000 to $43,990, and the performance model has been reduced by $9,000, bringing it to $53,990. Not cheap. The Model Y the long-range model has dropped by $13,000 to $52,990, and the performance model has dropped by $13,000, bringing it to $56,990. So this isn't cheap, but it is a step towards that budget barrier that they're going for, and it can show us a couple things, maybe a little bit more about the company. So Tesla could be seeing a growing demand in the EV market that they want to capture. I mean, the EV market's getting more and more competitive. We got the Mustang Mach-E, Hyundai, all these other different companies have their own EV option they're coming out with. So Tesla needs to either provide the best product, which I do think they are providing the best product, or they need to provide the best value, which I also think they're providing the best value. So if you have both of those, that could be a really good thing if people are debating between different EV models and you provide them with the best value. But not everything is sunshine and rainbows. Investors have a critical outlook on this. See, investors thinking there's not enough demand at the current price, so they need to drop the prices in order to get more people in the door to buy their cars. So if there's not buyers at $46,000, maybe there'll be buyers at $43,000. Investors see that as they're slowly building inventory. Why do they need to drop prices? If they're dropping prices, does that mean profits are going to fall as well? And are they running out of people to sell to? I personally don't think that. Multiple analyses have lowered their stock price based off of this. A Citi Analysis has lowered its price target to $140 and has lowered his delivery estimates to 40% instead of 55% increase from last year. But I am less concerned. I think this could be a good thing, actually. A new factory is being built and expanded upon, meaning that Tesla expects to be making more cars. You wouldn't be expanding a new factory if you didn't expect to have more more demand. This also comes as the Cybertruck should be hitting production lines pretty soon. But Elon's a smart businessman. See, maybe he wants to come out of the recession on top of things. When things get hard for companies, they have to sacrifice in one area, whether it being profits or inventory, but maybe his goal is to increase his market share in the EV market while everyone else is hurting by cutting prices. So he wants to keep his demand and just increase the market share and then come out of the pandemic, as more of a leading car manufacturer in the EV market. And since their financials really aren't bad compared to some of these other companies, undercutting prices and gaining that market share could be a good thing and will probably be beneficial coming out of the recession. Let's just take a quick look at the stock over here. So looking at the Tesla chart, we're putting it on the daily candles here, and we have the price around $118, down from all-time highs of $409. Now what I think is happening here is we do see a lot of consolidation around this $109 area. But take a look at the volume. Volume is a lot higher here. So there's a battle happening right here with buyers and sellers. And it comes down to, who do you think is going to win the battle? Is it becoming a good deal to where the buyers are going to take it back over and potentially come out this on the top side? Or is the sellers going to take over? Now, this morning we woke up and we were down. I know the candles don't show that. That's not what we want either. We want just to move around the chart. So this is the daily candles, but if we hop into the hour time frame, see, when news of the price cuts came out, we were down about 6%, and now we have recovered and kind of sold off again, currently at down 3.8%. Now, scenarios that I think are on the table, at least, is we have buyers and sellers here. So we want to exit this zone either up or down. It'll kind of show us a little bit of direction, but then we're going to have trouble getting through this area and probably around this area. So those are the different levels that we're going to be looking for. As we come up to 160, we're going to probably find some new sellers. We blast past that, coming up to 175, 177, we're going to probably find new sellers again. So my prediction would be we probably come back down here, consolidate a little bit more, and then we're going to head up. I think we're going up, but I am not a financial advisor. I am not a financial advisor, so you do what you want to do. But on the other side, if we're going down, we're going to probably see some trouble again around below $100. So Tesla ran so much during the pandemic that things are pretty artificially high and nothing is even close to the PE ratio. So we're just kind of waiting to see when people start chilling out. And it kind of looks like people are starting to chill out here. It did seem like that up here, but we all kind of knew that was still too high. So is this a better